What's going on, everybody? Jeff here. Welcome back to the channel. I haven't made a video past couple days, came down with a little bit of a cold. However, I've been thinking about something that's been kind of grinded at me, and I want to share it with you guys. I feel like I've always been straight with you. And also recently I made a video talking about market makers' incentive to holding APE up. They stand to profit quite a bit amount of money, okay, anytime an offering is done. However, on the contrary, there always is, the opposing side to that. And I want to share that with you. So let's get right into it. Before we do, market playing out like a general Friday ahead of a 3-day weekend, a little bit of a pop at the open and just continuing to sell off. Now, the market was due for a little bit of a relief after 2 weeks of a quite heavy selling pressure. Jobs report came out today. Number was a little bit higher than expected. All right, with which right now is not something that investors want to see. However, I think the initial reaction was positive because the unemployment rate rose to 3.7% and it was expected to be in at 3.5%. Now, generally, when unemployment is rising, that's not a good sign. However, because we are in a situation where the Federal Reserve wants to see unemployment rising a little bit to show that their policy changes are actually working, and because investors are really trying to weigh in, is there going to be a 50 basis point hike? Is there going to be a 75 basis point hike? I think the initial reaction was positive, and clearly, as you can see, we slowly just started to sell off. We are seeing a little bounce right now, but we just sold off from that 401 level. Now, over this weekend, I am going to make a video talking a little bit more about the entire market. I've been doing this for the past, I think, 2 or 3 Saturdays, and this one was very specific, talking about this shooting star candle that we had. Relating it all the way to the end of March. And as you can see, it's continued to play out. If you watch that video, you were able to take this down from 422 all the way down to 390. It was some great shorts. I had some long dated puts. Okay. If you're not inside, the group, come check it out. I detail this in a much, I talk about this in a much more detailed fashion than obviously I do over YouTube videos, but I'll continue to talk about that over this weekend. Now let's get into the video talking about AMC and APE. I'm going to zoom over to a 15-minute chart. Now, when we look at AMC, it actually is having a little bit of a rally today. It's playing out exactly as events tend to play out. Okay, a little bit of a buy the news, buy the rumor, sell the news. And that's continuing to happen. The price has just really been bouncing back between, that 850 and 950, maybe getting up to 10, but that 850 and 950 level, volume is a little bit lower than the average. And it seems like APE's volatility is a little bit higher. Okay, now looking at this chart, it's a very new chart, obviously, because it just started trading on the 22nd. And there really is not much to go off of as of here. Although this $5 magnet is quite attractive as of right now. But I talked about in a previous video that market makers are incentivized to holding up, stocks during an offering. I've watched this numerous times happen with small caps, especially biotech, low float, small caps. They stand to make a good amount of money. And the contrary to this is, if an offering is not made, what would that mean for AMC? So here's where you have to think about the other side to this. And it has nothing to do with, shorts, has nothing to do with squeeze potential. It's just strictly talking about AMC and APE. So first of all, when this was put into effect, you can see right now, you add 5 and let's say $9 together. Okay, it's trading at $14. It's less than it was on the 22nd. Okay, but you had a stock, AMC, that was sitting there with no ability to be able to dilute. Now you effectively not have done a split. Okay, it's a preferred equity dividend. However, the valuation is based off of AMC, which is why Adam Aaron had said, to almost treat it like a split. Okay, because he could, presumably see this happening. Okay, but now you have the ability to be able to dilute one side of that piece, which is APE. Okay, so therefore it does put a little more pressure. Now, is it good to be able to dilute APE when it comes to being able to raise capital for AMC to pay off their debt, longer term, better balance sheet, and so forth? Yes, we've already talked about that. Here's an article, which, first off, guys, I really do not like covering Seeking Alpha, and it's not solely because they bash AMC. They only push whatever narrative is presented to them. When it comes to any article about any company, it's very, very opinionated and it's very one-sided, and I don't like that. However, this is one article that I haven't, I fully went through, but it was something that kind of just correlated to what I was already thinking. And there's really just one piece that I want to talk about. And it talks about being able to dilute APE and the potential issues if the price of APE isn't held up. Now, obviously, we know that the max amount is going to be 5 billion. Only a billion has been authorized by the board, okay, in order to sell any shares on the market any more than a total of a billion, which right now is 517 million. A total of a billion would need to be approved by the board. But right now there is a billion, and obviously there's a little bit of a waiting period, but they have the ability to drop, let's say, almost 500 million shares onto the market as of right now. And this breaks down just talking a little bit about the amount of capital they would be able to raise. So if APE was trading at $10, and let's say they dropped 100 million shares on the market, okay, it was trading at $10. They gave an institution, or a couple of institutions, obviously a better rate on that. Let's say with like eight, let's say $8 for even numbers. They would be able to raise, a good chunk of money, $800 million, to be able to pay off some of their debt. Here's the contrary. When APE gets to be trading at $5 like it is right now, or even it gets a little bit lower, about $4, okay, one, it makes it just a little bit harder to be able to drop an offering and have it picked up by these big funds, because there's a little bit higher of a risk, the chance of them making a profit before the algorithms kind of kick in on it. It just makes it a little bit more difficult, and the amount of money that they're going to get on that deal is just less. All right, so if it's trading at, let's say, $5, they're able to drop it at $4. Okay, it's 100 million shares. Well, now that's 800 million that you would have raised in order to be able to pay down the debt. Well, now it's only going to be 400 million. Okay, so their ability to be able to pay down their debt becomes actually more difficult the lower the price of APE gets. Now, we recently, saw, I mean, even Jim Chanos had said, oh, listen, he's short AMC and long the preferred equity of APE. I think there's an argument to that. And like I said, it's because they're going to try to trap shorts into building a position, because eventually this, APE is going to go down, whether it's the first dilution, the second dilution, okay, and so forth. It's what Adam Aaron had stated, and eventually it is going to go down. However, here's the contrary. If the shorts aren't building a position, if they're waiting for that to happen, well, how low is that price going to be able to go before an offering is dropped? How much capital are they going to be able to raise? So this is more of, just a fundamental speaking. Okay. And the reason why I talk a little bit about the fundamentals when it comes to AMC is one, I'm still a trader, and an investor first before AMC ever came around. And it becomes less enticing to short a stock that has no debt and positive, cash flow, okay, and a bright future, right? You want to short companies that are struggling. It's clear as day. You want to short, companies or charts, okay, that are just, insanely overbought. They're hitting, peaks, hitting tops of resistances, okay, and so that's the fundamental aspect to it. So it's just, I wanted to bring this contrary approach to it, because I did make a video saying that the market makers might be, are incentivized to be able to hold this up. However, there is a different side to that story if it does get, if the price does drop to a point to where, they're selling or they're dropping of shares, the amount of capital they're going to raise, it just gets diluted even further to how good it or how much it can benefit AMC. So guys, that is it for this video. I'm going to make another video about the market over the weekend, and enjoy your Labor Day.